Good morning. This is Josh Hayes with Hedge Plus, and here is today's market monitor. Headline for today is soybeans may have joined corn and wheat in finding its bottom, at least for now, and outside financial markets are finally seeing a rebound. And that's important because if you've got the stock market improving, you've got oil prices starting to recover, it shows people have confidence in the economy. It starts to remove all this doom and gloom. I've seen the focus shift now more to what these tariffs are doing to other countries instead of being bombarded daily with how terrible tariffs are for the United States. The Trump administration said from the beginning that there would be some pain, but it would be worth it. He didn't come out so much and say, but the pain would be greater on the other side. But that's just the reality of it. That's why you do this. It's what leverage is. Any kind of battle or fight you get into, you know you're gonna take some blows, and it's not going to be necessarily fun on your side. But you've got the strength to make it at least come out ahead in the situation. And these battles we're having, trying to improve the trade balance between our country and all these other nations, that's what this is all about. And as I see, it's unfortunate that everything begins and ends with the stock market. But as the stock market has made a major rebound, it's definitely quieted those who were speaking out against these tariffs. And what these tariffs need is time to work, time to find deals. And that's what we're starting to see. Now, specifically with regard to soybeans, prices just simply dropped too low given the expectation of fewer acres. And we've shown this a few times. Patrick a couple weeks ago and Jason yesterday, how what even average yield would mean for ending stocks. And it just fundamentals, like I've said, always come back at some point. And when soybeans were getting just too low, the fundamentals, regardless of what speculators and technical traders were doing and seeing, there's a point when the fundamentals are what they are, and the price gets unjustifiable. And so we're starting to see that bounce with beans. There's also the fact that the spread of international prices between the United States and Brazil has closed dramatically. We're basically on even ground with them now. All those things suggest if we had gone any lower, we'd become the most attractive beans on the market at a time we typically aren't, right? So much as we have with corn and wheat. The flip side of that, which keeps bulls somewhat held back, is the fact that even with the lowest price corn and the lowest price wheat in the world, our exports are somewhat mediocre right now. We've definitely cooled off a bit. So definitely with wheat, with the world's, as dramatically, low price we have for wheat, not seeing much more sales of wheat kind of takes some of the excitement out of, and bullishness out of the market. And it's more, I think, a wait and see. Still waiting for trade deals to be announced. That's going to be the next impetus we need to really move higher. But I got to say, for wheat, as I said in the Q&A with Patrick this week, that's just the overall world demand type situation with wheat. World demand for wheat is on the decline. It has been for a long time. It's why funds are have record for number of consecutive weeks. They've been short wheat, and but as long as this stretch has been this slog with wheat, at least the wheat appears to be bottoming out as well. Good planting weather and forecast that calls for more is also going to keep new crop corn and soybean rallies in check. Taking a look at the weather, Southern Plains quickly shift from dry, which just a couple weeks ago we were on quite the long stretch of talking about how dry it was in the Southern Plains and waiting for that to really impact wheat prices. Instead, now we've got too much rain there, and If Oklahoma has already been flooding, and with more rain on the way, we'll see if the flooding expands beyond just Oklahoma into Texas and Kansas. But that's a concern. And then also still got the dry bias, Midwest, Central Plains, East East regions of our growing areas definitely could use the break from rain. But if we stay too dry and get too warm in the northern plains, in the Midwest, Great Lakes regions, that's going to be a problem pretty quickly. But that's not yet an issue right now. Right now, all it's doing, the dry weather there, is allowing you guys to get out and get planting, which is going to keep the markets in check. China, unirrigated areas are now been declared as either stressed to very stressed. That situation's getting more dire. Again, that impacts their winter wheat crop now and starts to put their corn planting in jeopardy. Argentina and Brazil, all is still well in both places. Good harvest weather for the bulk of ag areas in Argentina, giving them the dry break they need to get out in the fields and get harvest done. And then Brazil, it's starting to dry out there. This is the end of monsoon season, but they still have good soil moisture for their safrinha crop, so nothing of concern there right now. Here's that look of international prices. Dramatic difference from about a week ago when Brazil was around high 410. They haven't really gone up that much, but we were about 419 with our soybeans, and we've come down quite a bit. And that just kind of adds to you look for places of support or fundamentals will change. Well, soybean prices got too low. We shouldn't really be competitive with Brazil right now. And Argentina, no prices available. They haven't been selling. I believe that they just picked up selling yesterday. So I think we'll start to see a price there again. But I'm trying to recall, their price was even lower than Brazil's. So while soybeans got a little bit too low and are starting to bounce back, I don't think we're going to see some massive uptick in demand just yet. We are still slightly above Brazil and Argentina, but it does show you, at least illustrates how we can get too low. We shouldn't really even be close to them in price right now. So definitely seeing a bounce back. Expect more of it. We've actually started to explore taking some positions on the market, buyback positions with soybeans that we think could help improve your bottom line when the time comes to get to a cash sale. We get back up in the, let's say, the $11 range, have a position on that only adds to that and takes any potential sale in the $11 range a little bit higher. Taking a look at the overnight, up across the board, albeit with corn just about a half cent. And to note also that with corn, this is about 5 cents lower than we were at this time yesterday. But the news is good with beans up 4.5, which is now 15 cents over where we were at this time yesterday. A clear sign that our drift downward has stopped. How much of a bounce this will be and how long it'll last remains to be seen. But I saw somebody talking about beans at $9.65 yesterday, and that just shows you how some other people can see things differently. We don't see that. Again, with the amount of acres that we're going to be planting, even average yield puts us in a very tight ending stock situation. There's really no justification to see soybeans going down to $9.65 right now. In fact, we think this bounce is for real, and we think we've at least found the floor and potentially a chance to run higher. And with wheat, we are up 6.25 cents on the overnight, which is about 4 cents higher than yesterday. That's all for today. We've got Jason's Feedlot Focus coming up here in a couple hours. We'll have that for you. Otherwise, hope everyone has a great day. Good luck planting. Have a great weekend, and we'll talk to you again next week.